I'm here with my good friend Jay from Jason Lang from Outline Financial. And Jay, we're doing this because the real estate market is difficult to understand right now. We're getting a lot of news out there about from the media that the market's correcting. I'm reading headlines every day about across all of Canada. Home prices are down 5, 10%. You hear the CMHC coming out forecasting 9 to 18% home price corrections across Canada. And then they just came out again and they revised it to 5 to 10% depending on unemployment. So we thought that we'd start this once a month update talking about areas that we do a lot of work in, or rather that I do a lot of work in, because Jay, I should say, you own Outline Financial, which is a mortgage company. So for my clients who aren't familiar with you, why don't you give me a quick snapshot of your company?
Sure. Thanks, Brandon. So, the reason we're even here today is we love numbers. We're all about numbers. So, our background is around, statistics and we really, love it, and we appreciate, you inviting us here today to talk with you. A bit of a background of our company. We are a mortgage brokerage. So, we help clients access multiple lenders from one spot. We're based in Toronto. We have an office in Ottawa. And a lot of our mortgage agents have actually come from various banks. They've all have deep financial backgrounds. So we really try to offer that, complete experience to anyone from, first-time home buyers to luxury homes, right through to people that, may not fit in the traditional box. But anyway, check us out. Our website, outline.ca. And, again, I had to have that plug, but appreciate you inviting me, and hopefully I can add some value today.
No, absolutely. I mean, listen, you have all sorts of stats and charts, and I appreciate them. I love digging into them because, the truth is the numbers don't lie. But we should start by just saying that we're not here. I mean, our approach isn't to convince anybody to buy. It's not to convince anyone to sell or to rent. We just want to present the information, and then people can make their own decisions however they're most comfortable. Because it's a big decision whether you're buying or renting or selling. And once you're armed with the information, you can make a decision that you're most comfortable with. So that being said, let's jump right into things. And let's talk, first of all, about what the media is commenting on. So we have read a lot, like we said, about stats showing the Canadian home prices are down. And I'm not disputing that. I mean, across the entire country, home prices are down. Month over month, the month of April, and the month of May we're going to dive into in just a second. But I think it's important, and I'm going to share my screen here, so bear with me as we talk about, or we show you what the Toronto Real Estate Board is picking up on. And JDC this year, the Market Watch on your end.
Yep, I can see that.
Right.
Yeah.
So this is what realtors and the public has access to, and this is for last month. So for the month of May, stats came out in June, and you can see right here that across the entire GTA, Jay, you'd agree, unemployment is up?
Just up a little bit, I would say, a touch. Yeah, we've cracked the 13% unemployment mark, which is, pretty staggering, but expected given the situation.
Agreed. And, we expect GDP growth to continue to contract. I expect unemployment rate to it's going to remain high for a while. There's no question there. The Bank of Canada has continued to kind of cut rates, try to keep the economy moving along. I mean, you're a mortgage broker. You must be seeing incredibly low rates at this point.
Yeah, no, there was a period of uncertainty when the Bank of Canada started lowering rates because there was this unknown, this huge risk factor. So originally it was funny that while the Bank of Canada was lowering their rates, the banks were actually increasing theirs because of the risk, but that's since come down. And we always say this, we're at historical lows. We're at historical lows in terms of mortgage rates. Definitely on the fixed side, variable, the discounts are growing. So those are also looking like great options right now.
Well, I think when people hear about the Bank of Canada cutting rates, they automatically assume that the 5-year fixed, which is a lot of people's go-to, is going to go down. But like you said, it's actually the 5-year fix is tied to the bond market, correct?
Yes, exactly.
So, they're hedging their bets. There was an element, like you said, of increased risk. So I'm sure that they were factoring that in. And that's why, like you just said, I know from working with you guys and mortgage brokers and reading that, yeah, rates were up, but now they're back down again, which is great. So, these statistics here that we're looking at, once again, talk about the entire GTA. We're going to dive a little bit deeper into the downtown core where we do most of our work. But let's look real quick down here in the bottom right-hand corner, 53% decrease in sales for the month of May, year over year. New listings were down as well, 53%. Active listings down 42%, so the product that remains on the market. Average prices were up 3%, and DOM is days on market. You can see that the average days on market was up. And then once you dive in here, down at the bottom, you can see how it gets even more specific, whether you're looking at detached, semi-detached, townhouses, or condos. And interesting to note how the townhouse market, you can see that the average price was down, again, year over year. Semis were up 8%, detached up 2.7%, condos up 5% across the entire GTA. So interesting notes. And you can see how we go from Canada to the GTA, and now hopefully from the GTA into the downtown core, you will see how things shift. So Jay has worked hard. we're getting cameos from your kids in the back. I love it.
I know, yeah, exactly. Did he do something? Did he?
He did. I loved it. I loved it. That's amazing.
Okay, perfect.
So let's jump into the stats that we put together for last month, and he can continue to jump in when he wants.
Yeah.
So you see, you're seeing my screen here, month stats for all downtown zones, Jay?
Yeah, I've seen that. Yep.
Perfect. So this is the area that we're making reference to. So really, this is the area that we do a lot of work in, which is a huge area in itself. But we're talking anywhere from the beach all the way up, kind of through O'Connor, along the central districts here, up through Yonge and Eglinton, Yonge and Lawrence, over to High Park, and then down into New Toronto. So it's a big area, but we would say that these are more central districts. And anybody looking, you can see right here, C1, 2, 3, all the way through W6. Now, diving into these, Jay, we talk about average price growth year over year. And I think that averages can be skewed in a number of different directions. So I think we should take them with a grain of salt. I also think that, even looking at the median.
I have to jump in. I've got to give you a good analogy.
Yeah.
So when anyone asks about average price, I mean, we're looking at such a, relatively small amount of sales during 1 month, especially, this month. But, if your head is on fire and your feet are in a bucket of cold water, does that mean you average out to being comfortable? No, your head. Yeah. So anyway, I just thought I'd throw that in. So take it with a grain of salt.
Yeah.
But definitely it's a good
analogy.
indicator.
I mean, I hope that I'm never experiencing that, but yes,
Yeah.
and maybe we shouldn't use those analogies in the midst of a pandemic. But yeah,
fair enough.
I
Sorry
hear
about
what you're
that.
saying.
Okay.
So looking at the month of May 2020 over May 2019. We'll move on to the next slide in just a second that talks where we average everything out over the course of the last 12 months. But statistically speaking, you can see that growth across all home types, with the exception of townhouses, was up anywhere from 2.5%, semi-detached, almost 9%, condos up about 2.5% average price over the last year. So it's pretty good with the exception of townhouses. Now, if you and I have been talking about trying to smooth out some of those seasonal fluctuations. And looking at that here, you can see that if for the 12 months, the rolling average home price across those districts was still up over this time last year. Detached up 4%, semis up 5.7%, townhouses up 4.4%, and condos up, surprisingly, 7.1%. And then, of course, I want to thank Jay for helping put some of this actually most of this information together for us, and looking at over the last 5 years and over the last 10 years, the kind of return on investment that people have been again averaging. It's pretty good. I would say it's most.
Yeah, and I think it was tough to see that switch from the slide to the slide, but just to build on your point, the previous slide we were just looking at, the average price for the sales in the month of May, 2020 versus 2019. When we move to the next slide, what we're looking at here is the 12 months ending. So if we basically look at how many sales were between June 1st, 2019 to May 31st, 2020, we add those all up and figure out what was the average price. So you're getting a lot more. I mean, this takes away that, it makes it, I guess, a more useful or more stable stat when you're looking at average price for a 12-month rolling.
I couldn't agree more. So on that note, let's talk about that real quick, because you talk about those seasonal fluctuations. I'm going to get my tools out here and start doing some drawings. So we've got different home types. We've got detached homes, we've got semis, we've got townhouses, and then we have condos. This is the last 10 years of home price growth or fluctuations. And I think what we want to see, or what we're highlighting here, is at any given month, you can see huge swings in the average, not the 12-month rolling average, but just the month to month over that previous year. You can see how much home prices are changing in the average price. And what I think you'll note here, if I do this properly, so here we go. This is me having fun with annotations, right? Doing this just to give any of the viewers some idea of these seasonal fluctuations. Here, and then here, and then here. And this is just for the detached segment. What you can see is these lows, if you will, tend to coincide with the summer and then the winter months. And then again, here you've got, so, you know, the winter months, summer months, the winter-ish months. I mean, this is
Well,
where,
I'll just jump in there, because I think that's an interesting one, and you could see traditionally you're seeing that drop in those, you know, summer winter months, but actually a very good point on there. So last month, April, we did see that shock. I think overall in the 416, average price was down 7.8% year over year. But if you dug into that, or you dig into the details, you could actually see that what happened was the luxury market, so that 2.5 million plus, was actually causing it. So that area was down 8.3%, but there weren't many sales. So again, that's that average price issue, but that brought the whole market down, where really, I think in April, detached was stable, if not up a little bit overall.
well, why don't I invite you to share
Sure.
that
Okay.
chart that we put together,
I'll
because
I'll
that's one of the
try.
questions, right? It's a legitimate question, which is when you see huge swings in average home price, even if you're looking at the condo segment of the market here, you can see how much the average condo price dipped in the month of April. And I
Absolutely.
think your slide that you'll share with us right now
Sure.
will also, let me stop sharing on my end, because
And
I
can you
think
see my you can see my slide here?
I can, yeah. So
Okay,
this is the
perfect.
big
So this is, you know, we were looking at the core market. This is looking at the overall 416, but generally the trend is the same. So what we have done here is we've just said, okay, if we look at the detached market, yes, overall in the 416 it was down 7.8%. But if you look at the different price points of the detached houses, so, you know, under 600,000, believe it or not, there are actually still a few detached in the 416, but
416.
definitely not in the core.
Yeah.
Definitely not in the core. But that average price was down 3.9, 3.9. Detached homes between the 600,000 and 999,000 mark. So where you can still put less than 20% down, was up 1.3%. And you can see everything. And then we get to this $2.5 million plus range, and that average price was down 8.3%. But you know, we only had 17 sales over 2.5 million in April 2020 versus 90 in the previous year. So again, that we talked about that before. You have to take average price with a grain of salt, especially when you're only talking about such a few number of sales. You know, if we take a peek at the condo market, see if it's here. So you know, if we look at the condo market, you've got a similar trend. You know, the lower affordable sort of range was actually average price was up 3.2%. But as you start to move up that price point, this was April, you know, you started to see average price thing. And in fact, over $2.5 million condos, there were no sales in April. So that was really driving that condo market sale price down. Although you can see that, and this makes sense, I think. I mean, maybe you tell me, Brandon, this is good experience. What was going on in the condo market? Like, were you allowed to do showings in April, or how did
Yeah, we
that
were
work?
still, I mean, realtors were considered an essential service, but I think it was somewhat misinterpreted in that the essential nature of our business was really just in facilitating those people who were stuck, who might have sold a home in February or January, February pre-pandemic and had nowhere to live come April 1st, April 15th, May 1st, and had to buy. So for that month of April, really April 1st through, you know, the end of April, the only people that were transacting were those that were, well, a lot of the people that were transacting were, number one, those who were kind of forced into doing so because they had previously sold a home, or anybody who felt compelled to try and get a deal. And as you can see from this chart here, now again, I understand that this encompasses all of the 416, but I think it is fairly representative of what was happening in the downtown core, which is anything under 600 grand was still moving. I mean, we sold a few properties in the month of April, and believe it or not, people were buying them sight unseen, and they were buying them. In a couple of instances, I got into multiple offers. The homes that I sold, with the 3 homes that I sold in April, I mean, there were 2 that were under 600 grand. Like I said, we listed them. People bought them without having had seen them. They were on the market for a day, both of them. Pricing was, depending on the neighborhood, King West, we were getting 1,100 a foot without parking. That's a big number. I did have somebody who was
a resale.
Yes, yeah. I did have somebody who was a part of that, 1.5 to 2.5 price point, who did one of those 5 sales, and they bought without ever having had seen the property. So yes, that still happens even at, almost 2.5.
Well, we saw, I mean, was that in May, we saw that did happen. I mean,
yeah.
There were, what did we have? We had 2 sales, I think, in May over 2.5 million or 3. I can't recall, actually. I don't have that slide here, but anyway, it's very interesting. So maybe we'll go back to your slide. So that just gives some context around that dip that we saw in average price over April, where it wasn't necessarily that the market, the average price as a whole went down. It was just sort of this slowdown in the high end market that pulled the average price down. So
yeah,
I'll stop sharing mine. Yeah,
it's just important to understand like where the slowdown was happening, because I think if you're living in a $1.5 to $2.5 million home, you're probably not. I mean, you might be more impacted by what's happening in the stock market. Now, I know all of those losses have since been eroded, and we're back into kind of neutral territory. But you're also not in a position where, if your family is expanding, you probably have enough space that you're comfortable enough to ride out the next 3 to 6 months. And we'll talk about the next 3 to 6 months at the tail end of this. So let me get back real quickly to the charts that you have that we were discussing. So again, you'll see the seasonal fluctuations, but overall, we've still been on an upward trend. Right here, we'll talk again really quickly later about 2017 and the kind of where things went and how we've kind of been rebounding since. And really, the condo market has just continued its upward trajectory over the last couple of years. So I don't want to bombard people with all sorts of statistics. And there's some excellent realtors out there doing some excellent work. I will say that. Some of them I follow along, and I think they're great. Like John Salas is great. I follow him, and I think he does an excellent job of presenting the information, and I'd like to do the same. So looking at the number of sales, kind of to piggyback on what you were saying, sales activity was down. Like, no disputing, no arguing that. And that's what the media picked up on, right? So detached homes, 63% fewer sales than this time last year. Semis, almost 60% less. Townhouses, condos, everything was down. You can see the number of sales versus this time last year was definitely down in the month of May. No arguing that. So skipping over the next few slides, we won't dive into this. We're happy to, if anybody ever wants to meet up with us or even just virtually chat, we can talk about these seasonal fluctuations. But what I want to jump down to next are the number of new listings, relative sales, and the number of, next slide, active listings. So let's go back to new listings, new properties coming to market. So we talked about a 50 to 60% decrease in sales activity, but what we also found, and what I noticed, Jay, boots on the ground here, is that there were a lot fewer listings for most home types. So detached homes, you're seeing a 50 to 60% decrease in sales. You're seeing a similar decrease in the number of listings. So sales were down, listings were down. So anybody who was still hunting from the same relative number of available properties, fewer buyers, fewer sellers. So it was still fairly competitive, keeping prices fairly stable. This is what I wanted to highlight right here. Mm-hmm. If you recall, if I go back just a few slides here, we talked about 57% fewer sales in the month of May this year over last year, 57% fewer condo sales. Yeah. There were 28% fewer new listings, which I think is really important, because in all the other categories, sales were down, listings were down similarly. Condos, it was like 50+% fewer sales, but only 28% fewer new listings. So we're seeing a bit more inventory there. Exactly. If I move on to the next slide, which is active listings, properties that are still on the market at the end of that first month, we're seeing that a decrease in, again, 36, 25, 38% for low-rise homes, but an increase of 2% for condos. So you remember last year, we're talking about having 900 plus sales in the month of May. We had 1,400 active listings. This year we had 450-ish condo sales in the month of May. And at the end of the month, we had 1,400 active listings. So we're seeing fewer sales, but more active listings, which in my opinion is actually putting a little bit, not downward pressure, but it's certainly tempering the growth, the price growth in the condo segment.
Well, yeah, and I think those are great points, and this is actually a very interesting statistic to look like. Over the past number of years, the condo market has been relatively undersupplied. So if you look at the active listings that were sitting on the market at the end of any given month, it was well below the 5-year average or the 10-year average of active listings, and this is starting to creep up, and it's actually starting to creep up pretty quickly. So in the condo market, I think what we
I was just
seem
going to
to
say,
have
do
to
you
look
mind
out
if
for.
I
Yeah,
skip to the next couple of
sure. Yeah,
slides?
let's do it.
Because just keep going, and this is what you're making a reference to here: months of inventory.
Exactly. So, maybe I'll just say, so, months of inventory, if you define that, it's if we had no new listings come on the market and we take the average sales per month over the average inventory per month, it's how long will it take, given the, that 12-month average pace of sales, to absorb the available inventory, essentially. So, things have changed a lot recently because we know that sales have dropped significantly. So this is probably, to move this months of inventory up or down, there's a lot going on in the market. So maybe you want to
Well,
jump in from there.
I agree with you wholeheartedly. I think I'm going to draw this red line right about here, because this is the line that we would look at to say anything above about 4 months of inventory, 4 to 5 months of inventory, we're kind of in balanced market territory. And I think that in Toronto, we just haven't seen that in years and years and years. So looking here, like back in 2008, 2009, sorry, I'll draw some arrows. You can see that during the credit crunch, we still, I guess I did that backwards, but anyway, you get my point. We still didn't get to balanced market territory. We did in 2013 for condos. Again, for low-rise homes, semi-detached, detached row houses, we've been in very much a seller's market for years. And I think anything that deviates from a home selling in 2 days or 2 hours or 5 days is seen as a failure, when it's just that trying to get to a balanced market would be probably more, it would be healthier in terms of what I think we should be expecting in terms of future sustainable growth, right? So Jay, to your point, what I'm noticing right here is just the slightest uptick in months of inventory for condos in particular. You can see the rest of the home types, semi-detached, we've got less than a month of inventory. Townhouses, 1.39 months. Detached homes, 1.67 months. Condos, we've probably gone from 1.5 to about 1.7 months of inventory. And I wonder how quickly, because you made a really good comment about the 905 region in 2017, when things did correct more so, and again, from my experience, more so in the 905 area. In the downtown core, nothing really changed. But I'm looking at things here and seeing it was probably over the course of about 6 to 12 months that we increased pretty substantially in 2008 through 2009 the inventory levels. And I wonder, are we on that same trajectory right now? Like, we're still a far cry from it, but are we going to get there?
Well, if we had another May where you have, your sales dropping by more than 50%, but your new listings only dropping by 20% or something, I mean, that's a big volume of inventory. And again, this is sort of muting the impact, because this is taking an average. This is taking kind of a 12-month period. So if we just look at the past 2 months and we start to build, we could see that, especially in the condo market, rise pretty quickly in the central region, unless sales pick up. I mean, if we're back to, if everyone's back, there is a lot of pent up demand for buyers. We know that. On the mortgage side, our phone is ringing all the time with people looking to try and take advantage of this time, get ready for their pre-approvals so they can jump on opportunities. But I don't know, maybe you tell me, what are you seeing on the listing side? Are people feeling like they want to put their properties out on the market now?
I feel like a lot of people were holding off the months of March, April, and even into May. And when I had a handful of people list their properties for sale, over the last couple of weeks. And I think the initial thought was, oh my goodness, this is the start of the wave of listings that's going to come. And, you know, all of a sudden we're going to get saturated. But I had to remind myself that these people would have normally called in March or April or even in the beginning of May. It's just that everybody put everything on hold for 60, 75 days, waiting to figure out, number one, if you can't get anyone out because we're not supposed to be going out, why would you list for sale, right? If you can't get people through the door. And now it's like, okay, the spring market's been shifted a little bit later than I think it has in the past. So I agree with you. The big question right now is who's coming back first? Is it buyers or is it sellers? Because if the buyers come back first, which I think it sort of feels like they were just from the last 10, 14 days, you know, we're going to see, without more supply, we're going to see prices kind of pick right back up again. And some properties I'm listing are selling very quickly and some are taking a little bit longer. I won't even talk about the rental market right now. I'll touch on it really quickly right before we wrap this up. What I wanted to talk about real quick is this right here. So I'm going to show everyone. Let me just pull it up here. Oh, sorry, I got too many screens open on my end. So here we go. So Jay, can you see on your end here, the central core?
I can see it,
Yeah. So this is the downtown core of Toronto, anywhere from, you know, more or less the Canary District, Distillery District over to, you know, Liberty Village, and up through Yonge and Eglinton along the subway line. So looking at this area here, we've got the same statistics. But what I wanted to show everybody, or what I wanted to discuss really quickly, is once again, condo values still up year over year. Again, take this with a grain of salt. I think you're seeing huge fluctuations month over month, especially in the low-rise sector, detached, semi-detached. And a big part of that for me is when you only have
let's see the number of sales. Exactly, 22 sales.
22 sales. It's those averages can be skewed drastically month over month, which is why I think you really need to be taking it with a grain of salt. The number of condo sales was down. And then touching on this here, which is, I'm just going to scroll, sorry, I'll make this more efficient in the future. But if I scroll down to one of the last slides that we had, once again, months of inventory in the downtown core in these areas here, you can see we fell off a cliff in terms of listing inventory for the condo segment between 2013, 2017. We went from 4 months of inventory down to about, you know, 1.4, 1.3 months of condo inventory. And I think that this increase in the detached segment of the market increased so much, which is still, again, relative a balanced market up here at 4 months, was still relatively low. But as detached homes became very expensive, people started to scoop up condos and other types of homes, which have kept these inventory levels low. But again, we're seeing the start of possibly an increase in inventory, but we're still pretty far off from being a balanced market, which honestly, in some cases, I'd love to see, just because nothing worse than going into a condo or a house and being like, hey, this is listed for 1.2 and it's probably going to sell for 1.5, right? This condo is worth 700 and it's going to sell for 950. So I'd much rather go into a condo and say this condo is listed at 950 and it's worth 940 to 960 or 930 to 940. So we'll see as the months of inventory increases what happens here.
And I think, sorry, I was just going to, going back to that drop in months of inventory from, you know, call it 2013 onward, that we had a lot of mortgage rule changes during those times. So it was a lot of, you know, stress tests being implemented, you know, a lot of restrictive policies. So really what we saw the shift driven by affordability. So not only are detached running away because, you know, prices were outpacing condos, people just sort of dropped down that ladder and they could only get into a condo. And we also had less completions over that period as well. So that, you know, but it was quite amazing that you're going from 4 months down to, you know, close to 1 month over that period of time in terms of months of inventory. Yeah.
So last chart I want to show everyone, just because my business partner, Christian, does a ton of work in the east end of the city. And what we have here is a hot pocket that for the last 3 months has continued to defy, I don't want to say logic, but just we've seen continued price growth anywhere from, let's call it Riverside, Riverdale, up through East York, through the beach. And, you know, looking at where things have been over the last year, this is for the month of May, 2020 over 19. But what I want to dive down to really quickly, continued growth. if we smooth that out, we talk about the 12-month rolling average, you can see that condo prices are up substantially over this time last year. Actually, all home types are up quite a bit
And
over this
even
time
you
last
can
year.
see the growth over the 5 and the 10 year. I mean,
Yeah.
it's been tremendous in the East End.
Yeah, it really has. So scrolling on down here, what I'm going to do, again, you can see here, happy to dive into any of these charts for anybody who's interested. We can see the seasonal fluctuations and the growth over the last number of years here, but I'm going to slide down to this last slide, which at least gives people some perspective on why things are as crazy as they are. All home types in this area, all home types, 1 month of inventory. So stark contrast, like half a month of inventory for semis, like less than a month for row houses, townhouses, 1.2 months for detached, and 1.4 months of inventory for condos. Like, it's just a hot neighborhood. Like, I'm not surprised. It's a hot pocket of the city, and not because it's affordable. It's just there aren't a lot of options to choose from. So before we wrap things up, I thought that we'd touch really quickly on the rental market. Rental market's down. Like, there are a number of things that changed that predated this pandemic. I noticed that the Airbnb rules changed back at the end of 2019. We started seeing rental properties taking longer to lease. So I'm saying anywhere right now, statistically, we're looking at a 5 to 10% decrease in the average rental price across the board. It's very much a renter's market as opposed to a landlord's market as it was a year ago this time. I'm concerned about the new development market. I'm not concerned about it on the whole. What I'm concerned about is if prices do if the price growth starts to temper. People have been paying statistically 30, 40, 50+% of a premium for new construction condos the last number of years, basing, I think, a lot of their decisions on their experience in the past, where it's like, well, I made $100,000, $200,000, $500,000 in some cases, depending on what you bought in the new construction market. I'm just going to do it again and do it again and do it again. And sometimes, maybe I'm speculating, not paying attention to what the resale market in that same neighborhood is trading for. So if I'm getting $1,000, $1,100, $1,150 a foot in King West, and all of a sudden somebody's going and paying $1,400, $1,500 a foot from an investment perspective, not an end user where you're thinking about living there for 7, 10, 15 years, but these investors looking at things, if rental prices are down or stabilizing, they're down. And if you were forecasting rental growth continuing at what I heard some people quoting, which was 5 to 10% annual increases in rents, in 2 years from now, or 2.5 years from now, when that condo is completed, with immigration, I mean, we have 170,000 fewer people coming to the country. That's what they're forecasting for this year. Fewer absorptions as a result of that. Do you think that there could be any challenges in the future on the mortgage side of things with investors who bought these new condos needing to get appraisals and then not appraising out at the $1,400, $1,500, $1,600 a square foot range? Because if prices in the condo segment start to level off, the banks aren't going to loan them the money.
No, I mean, you bring up a very good point there. So in any time of fluctuation where you're having a rapid change in potential price, appraisal becomes a huge component. So say you're in an increasing price environment. So you bought your property, but you bought it where you think the market's going to be in 2 months. So maybe in that case, you delay the appraisal until sort of the market caught up to what you paid. But the flip side is true. So in a declining price market, you want to hurry up and get your appraisal. Pick your lender, do your appraisal, lock it in. So if you're working with Brandon and he's showing you, here's the comps, right? Here's the comps that have sold within the past amount of time, and this is what I'm basing the purchase price on. Let's hurry up and get the appraiser in and use those comps, because you know what? If you wait 30, 60 days, they can't use those anymore. They're going to have to take the current sales, which could be 5% lower. So I think that's very important, especially I think if we are going to see a bit of a slowdown in the condo market. Pick your lender, get the appraisal done, and lock it in, right? You can always get something, you know what I mean, in order to close the deal.
I think a big part of it is expectations. It's just understand. I mean, nobody saw this pandemic coming. I was a little reticent to believe some of the rental growth forecasts that I heard some realtors throwing around. I just thought it was a little too optimistic. That being said, everybody's entitled to their own opinions. and risk and reward, you take on that responsibility. I just have a hard time personally paying 30, 40, 50% more than what the resale value is, knowing that essentially the market has to catch up and surpass that amount for me to make a return on my investment. Again, if you're going to live there and it's going to be your principal residence, and you're going to buy a Bjarke Ingels project in King West and pay $1,700, $1,800, $1,900 a square foot because you love the architecture, I agree. It's probably going to be one of the nicest buildings in the city. From an investment perspective, buying a 500 square foot condo for 900,000, and then with closing cost, development fees, and interim occupancy costs, expecting to turn that 500 square foot condo over or selling it for 1.1 or 1.2 million to the average Torontonian who probably isn't making enough money to be buying that, I'd be very cautious. And the rental numbers, frankly, don't make sense. I mean, when you crunch the numbers based on the rental market that we're in right now, and even if I attribute a 20, 30% premium to rental values for a project like that, it's very difficult to make the numbers make sense. So I would caution anybody right now to just be very aware of the prices that you're paying, the rental prices that you're being quoted. And it's not that new developments aren't still viable options. I think I would just be very cautious about my expectations moving forward. So before I let you go, any forecasts before we meet again next month? Listen, I won't put you on the hot seat for the real estate. Any
Sure.
big? I know the CMHC is changing rules from
Yeah.
July 1st. Any other big mortgage changes that we should be aware of?
I mean, the big thing was I with it a minute. So we do have some print material if you want to send it out, but really high level. July 1st, CMHC says they're restricting qualifying guidelines. So before you could use 30, out of your income, you could use 39% to go towards home expenses like mortgage at the stress test level, property tax, heat, 50% condo fees. That 39% ratio is going down to 35 as of July 1st. So that could impact somebody what they could qualify for. It could impact them close to 10 to 11%. So for example, if you're shopping for an $850,000 home, now you're pre-approved, you're looking for that. As of July 1st, your purchase power may go down to about 770,000. So it could change. Now, the one uncertainty was there's three companies. So you've got CMHC, Genworth, and Canada Guarantee. Usually, Genworth and Canada Guarantee follow whatever CMHC does. In this case, they're saying they're not. And a lot of people are jumping up for joy and saying, yeah, which is great news. However, Canada Guarantee and Genworth don't necessarily underwrite the same as CMHC, so they may have, a little bit more restrictive guidelines than already. And then even more, the lender at the end of the day can supersede all of them in terms of, so the lenders may say, listen, you know what, CMHC's got a point. We're going to actually restrict our lending guidelines for people with under 20% by the similar rules. So, a lot sort of influx there. The biggest thing is, you go figure out what you can afford. Worst case scenario and best case scenario. Best case is nothing changes. Worst case, it could be a 10% reduction in affordability for people with less than 20% down. So I think that's it. Otherwise, the mortgage market rates just are unbelievably low. I think the biggest thing will be, are we going to get a wave 2 of COVID?
Yes.
Hopefully not, knock on wood. I feel like the market's coming back to life. Phone's off the hook. It's, actually, one more point, if it's okay, and we can always cut, I'm sure. One thing you may be hearing a lot about is this mortgage deferral cliff, and I think this is very important. This is actually a very important topic for all of the Toronto market and Canada as a whole. So, when COVID hit, the government sort of stepped in, and all the lenders stepped in and said, you know what, we understand you maybe lost your job. You have the option to defer your mortgage basically for 6 months, defer your mortgage payments. It's not a mortgage forgiveness. You eventually have to pay that interest, but you don't have to make a mortgage payment. So starting around September, October, November, December, January, these deferrals are going to stop. So now you're going to have they're thinking anywhere between 13% up to 20% of all mortgages in Canada potentially have elected to take this mortgage deferral. And at some point, they're going to have to start paying their mortgage again. So if if the economy hasn't come back, if people still don't have their job, if they're not getting that 2,000 CERB payment anymore, that it could be it's now not people choosing to list, it's people having to list. So I think we're sort of in this honeymoon period in a way where, talk to Brandon. If you're thinking about listing, it may not be a bad time right now because you've got sales and new listings down together. Prices are staying relatively the same. So, you know what, look at your options because, you know, a bird in hand is potentially better than, you know, not knowing what's coming in down the pipe in the future. So,
Yeah, I'm glad that you brought up the mortgage deferral cliff, because I think that I put out a few surveys on my Instagram, which is not representative of the market, just my clients. But I was curious back in April, who was deferring mortgages, who had tenants not paying their rents, all of these sorts of things. And the reality is that very, very, very few, less than 5% of my demographic had deferred anything. Actually, it was even
okay,
less than that.
good.
But I think anybody who's looking for a deal, or is using or is anticipating that these mortgage deferrals are going to result in a surplus of desperate sellers, should be hoping, or should be waiting rather, until, like you said, the fall. Because if we do get a second wave where, you know, the government does force us to lock in again, and if these deferrals do result in people needing to desperation sell because they can't find other work, then that's when I think that that's going to exist. And we do need a number of successive sales in a downward direction in order to set a new precedence at that lower end of the price point, which is not what's happening right now. You had commented, or actually through Urbanation,
Yeah,
Sean Hildebrand from Urbanation did a great presentation where he talked about it was one of your colleagues, one of the gentlemen that works for you, Jay, at Outline, who commented on the number of people across Canada in which province were the mortgage deferrals happening the most. Because I think across the board, it was about 15% of the CMHC's mortgage market had applied for that mortgage deferral. And then, you know, it's Canada's great. What's happening in Ontario? And then more importantly,
yeah.
forget Ontario, what's happening in Toronto? Like all of these, there is a trickle down effect without question. But I think we do need to look at the neighborhoods that you're thinking about buying in. And for me, a big part of it goes back to what's your expectation? Don't expect to buy something and flip it or sell it in 2-3 years and make 100 grand like your friend did, or like you did in the past, or 200 grand or 500. I think look at properties like real estate has been in the past, which is a buy and hold. Plan on holding for at least 5, ideally 7+ years from now, because I think you're going to be able to ride out any sort of fluctuations that might happen over the next 6, 12, 18 months. And if we do maintain social distancing, if we do go around carefully, wearing our masks when we're inside, not touching our face like I've done so many times in this presentation, then, you know, hopefully we will minimize the possibility of a really detrimental second wave. And we don't want that. None of us do. I don't want the stock market to correct, not just because I'm invested in it, because I think it's bad for all Canadians. I don't want the Toronto real estate market to correct, because not that it's just bad for me as an investor and as a homeowner, but it's bad for everyone. It might be good for the people who are willing to jump in. But what I found in the past, like in 2008, 2009, when the market corrected, very few people jumped into the market. I can remember the 2, 3, 4 people when the market really got bad that jumped in and took a chance, and they were trailblazers at the time. And I think most people aren't comfortable when there's so much uncertainty jumping into a market that we don't know. And this is the most unknown I think any of us have ever experienced. So we could ramble on for hours on this, but I think what we'll do is we'll cut it off there. Next month, we'll dive back in and really look forward to anybody with any questions so that we can analyze even more information on these charts and stats. So Jay, thank you so
Yeah.
very much.
No,
It was
thank you.
excellent. I'm glad that I had a partner here to chat with so that I wasn't just rambling on by myself. And next month should be very telling in terms of how is this recovery, if it is a recovery, taking shape.
Absolutely.
Yeah.
Absolutely. All right. Well,
Awesome.
thank you very much.
No,
Brandon.
we'll talk to you next month.
Talk to you next month. Okay.
Yeah.
Bye-bye.